Do you envision yourself retiring early? Would you like to discover if you can turn your fantasy into a reality by investing in Tesla? No need to search any farther. We've got you covered. Many investors have been wondering if Tesla's stock could be the key to an early retirement due to the company's recent sharp increase in price. This video will examine the possible dangers and rewards of investing in this massive electric vehicle company, as well as how much Tesla stock you'll need to retire by 2025. Thus, I'd like to invite you to first smash that like and subscribe button. Hold on to your notepads and pens while you get ready to see how Tesla might help you reach your financial objectives. Did you know that if you own a specific number of shares of Tesla stock in 2025, you could be able to cruise into early retirement? It's no secret that a lot of people think Tesla will allow them to retire early. Those who are intrigued by this concept ought to track the company's advancement to learn how Tesla could assist them in realizing their objectives. Watch the video below to find out how much Tesla stock you'll need to buy in order to retire by 2025. The question of whether Tesla's stock is undervalued or overvalued continues to divide supporters and detractors of the company. In actuality, Tesla has collaborated with other businesses to grow its customer base and output. The global head of Morgan Stanley's automotive and shared mobility research, Adam Jonas, is a big fan of Tesla too. Stanley raised its price prediction for Tesla shares from $1,200 to $1,300 in response to the $2 million delivery forecasts for this year. Adam Jones is a Morgan Stanley analyst who has long been an enthusiast of Tesla. He has expressed worries about the company's valuation and the possibility of more competition in the electric vehicle sector, but overall, he has been supportive of the business and its future prospects. Goldman Sachs analyst Noel B. Delaney has also been largely positive about Tesla. He upgraded his price objective for Tesla from $780 to $860 in a research report dated February 2021. He cited his optimism for the company's prospects for greater adoption of electric vehicles as well as its strong demand. Credit Suisse analyst Dan Levy is one among many who is increasingly apprehensive about Tesla. He reduced his rating on the stock from neutral to underperform in a research report dated February 2021 because of worries about the company's valuation and the possibility of more competition. He did point out that Tesla is a market leader for electric vehicles and has a strong brand that might support it through any difficulties. Even Dan Levy boosted his price and remained enthusiastic on Tesla shares. According to Target from 11/25, the current stock decline is a great time to buy. Levy believes that Tesla should outperform Wall Street's projections. Cathie Wood, an American investor and well-known stock picker, predicted that Tesla would be valued $3,000. Who is the founder, CEO, and CIO of $60 billion technology investment firm Arconvest? Its portfolio includes investments in genomics and self-driving cars, despite the fact that one analyst predicted that by 2025, the price of Tesla shares will surpass $25,000. Because this prognosis was made after a thorough analysis of the EV company's historical market performance and projected growth in response to more sales, it shouldn't be completely disregarded. The leading electric vehicle manufacturer's stock price is expected to rise, and if this prediction comes true, Tesla investors may enjoy a substantial return on their investment by 2027. There's enough to be positive about. Similar to how Apple makes the iPhone or how Microsoft uses Intel chips and Dell PCs, Tesla builds cars by developing software on custom hardware. Because Tesla cars have fewer parts than traditional auto business models, Tesla is able to continuously improve the software capability of his vehicle every few weeks. This is in stark contrast to his standard auto industry model, where the product remains the same during ownership. Since they don't require expensive oil changes, their total cost of ownership is substantially less than that of internal combustion cars. That's muffler replacement or tune-ups compared to traditional internal combustion vehicles, which are believed to have 2,000 parts per vehicle. Traditional manufacturers are aware of this, as they receive a large portion of their earnings from their service companies. Considering that each of Tesla's battery-powered vehicles only has about 20 pieces, they are far simpler. Customers' total cost of ownership is significantly reduced as a result of this simplicity. In addition, Tesla plans to incorporate cutting-edge battery-related technologies into its vehicles and has acquired battery manufacturing companies, which could further reduce ownership costs. Other automakers are also making an effort to gain experience with electric batteries, but they will still be trailing behind in this growing market. When considering it from a marketing standpoint, Tesla has a distinct edge in some regions where buying an ecologically friendly, zero-emission vehicle would not be appealing to consumers. For the foreseeable future, other manufacturers will probably find it difficult to catch up on this front and level the playing field. What's the next step for an automaker? Even though traditional automakers will likely offer more electric vehicles in 2020, it's possible that these models won't be software cars, but rather regular automobiles that have had electric motors added. Of course, much like any other connected item, software automobiles can have security vulnerabilities. Tesla may solidify its position as a market leader by showcasing efficient risk management. How do you feel about purchasing Tesla stock? Nobody can genuinely say they aren't excited for our retirement. But most individuals are unaware that in order to live comfortably in retirement, they'll need a solid financial foundation made up of profitable, for example. Investments could be successful if you buy them at a high enough price and invest in profitable companies. Tesla is working hard to demonstrate its accomplishments to detractors as well as investors in order to meet the high standards that investors have set for it. Tesla plans to build the sports car, the affordable car, and other vehicles with the funds it has raised. An ARK investment asserts that by 2026, the company will have introduced the Optimus humanoid robot on AID and been working on useful AI solutions. Despite having much lower margins than revenue from robo-taxi services, Tesla's robot taxi business is predicted to earn more than half of the company's EBITDA and contribute 60% of its estimated value. They predict that, over the course of the simulation set, electric vehicles will account for 57% of the company's overall revenue by 2026. According to Annuity, Tesla has by this point arguably made a name for itself in the market, and despite the fall, its performance suggests that the EV company will continue to perform well. Many Tesla bulls support the company's vision of a cleaner, more ecologically friendly world and aspire to retire affluent, devoted Tesla owners. Consequently, the business, considering that the median retirement income in the US is roughly $47,000, this might someday offer a good retirement choice. In certain places, you'll need at least $4,100 a month on average to retire comfortably. $4,100 a month might be sufficient to pay for utilities, groceries, rent, or a mortgage, and other essential living expenditures. However, $4,100 a month might not be sufficient to pay all costs in other locations or for people with more expensive tastes or activities. $4,100 a month might cover rent or a mortgage payment, utilities, groceries, transportation, and some entertainment or leisure activities, assuming the typical cost of living in the United States. The precise distribution of costs will, however, differ based on each case. Because arbitrage allows American retirees to stretch their retirement funds much farther in nations like Panama, it's critical to establish a budget based on your own needs and income to find out how far $4,100 a month may go for you. Mexico, the Costa Rican, a growing number of Americans are electing to spend their golden years in Portugal or even Thailand. There, you'll need a minimum of $50,000 in savings, inflation adjusted using a standard withdrawal rate of 5%. You will need retirement assets of at least $1 million. If you plan to retire in 2030, need at least $4,000 per month in retirement income and want to remain in your current nation. It's great news because if the company continues to perform well, Tesla shares will increase in value over time. This implies that, even if you continue to spend 5% of your retirement savings each year, your investments will last for a very long time. If your financial goal is to retire from the workforce by 2030, buying Tesla shares is likely the finest investment you can make right now. The fact that the stock has increased from 5.74 cents to 12.29 throughout the years is what ultimately causes this to go back a few years to November 2nd, 2016, when Tesla was trading at just around $38 per share, An investment in Tesla made in November 2011 would be around $240,000 in value today, which compared to a return of 35.7% from a comparable investment in the 500. This is a return of nearly 20,000%. What are your thoughts on the comment that is below? Tell us once more. Make sure you subscribe to our channel and hit the like button. We hope to see you in our next videos.